Hello and welcome. So in today's video, it will be all about the Quasimodo. So the Quasimodo is just a chart pattern for the supply and demand traders. So supply and demand traders probably know what I'm talking about. Now the Quasimodo is derived from the cartoon character that a lot of you know, whereby we have the right shoulder higher than the left shoulder. So it's more of a slanting shoulders. Now, it looks like a typical head and shoulders pattern, but it is not the same. How? Look at these graphic depictions. Now, the typical head and shoulders pattern, we have the left shoulder, we have the head, and we have the right shoulder, and we have the neckline. And the neckline is almost the same, the levels, the swing levels that make the neckline are almost on the same level. And you're told whenever price breaks below the neckline, you enter the retest, to sell the retest. For this example is for the sell model. So you are told that whenever it breaks below the neckline, you wait for the retest, then you enter a sell. And the stop loss will be huge because they always say that your stop loss should be placed above the head. But this is not the case for a typical Quasimodo pattern. Now, for the typical Quasimodo pattern, we have the high, we have the low, then we have the highest high. But whenever price breaks this low, you enter whenever it returns to the high, or probably the shoulder that made this level, the left shoulder. So this is the high, low, the higher high, then we have the lower low. Can you see the difference? This lower low is lower than this. This swing point is lower than this. Is lower than this swing point. But as compared to the typical head and shoulders pattern, the lows are almost the same. The neckline it is at the same level. But this one, we have the high, low, higher high, lower low, which is lower than this one, the low. The advantage of this Quasimodo pattern, just see the difference. Let me use another color so that you can see the difference clearly. And this one is not. Let me use blue. So let me use blue. Are you able to see the difference? This one, we have the swing points making the neckline at the same level, and we are told to sell whenever it retests the neckline after the break. But this one, you have this shoulder, then a low, then it made the head, then it went lower, breaking the last swing point, then it retested. Whenever it retested this shoulder, it is when you are taking your sells, your shorts from. So this level, you will be taking your sell entries. So it is different from the typical head and shoulders pattern. This is the typical one, the obvious one, the chart patterns that are taught, but this one is different. Now, this QML level alone, it is risky. It is very, very risky. Now, at least, let me remove this one because you'll not be using it now. The Quasimodo level, without a framework on why you want to be a buyer or a seller at that particular level, tends to be risky. You must be biased towards the market structure. At least the market structure should be communicating to you. The market structure, number one, is the genesis for profitability. Then number two, at least there must be a narrative on why you want to sell. Why you want to be a seller, for provided it was the sell model. So whenever the market retests, at least you want to be a seller whenever the market tests this shoulder, this high. But at least there must be a supply level at this particular level. So the supply level can be in form of at this particular level, because it makes no sense you want to be a seller whenever market retests this level, but there is no footprint, and then at least the market makers should leave a footprint for you to follow. So there must be a supply level, and it can be in form of the drop, base, drop, the drop, base, drop. It can also be in form of, let me just use this, a rally, base, drop, you know. Then this level for high odds, it must be a level, a key level in a sense that it had, it was a support resistant flip, whereby we had multiple rejections. So an MPL, maximum pain level, maximum pain level. So maximum pain level will diverge much on it later on. So at least before you want to sell, because this is the typical selling condition, whenever the market breaks this low, at least Quasimodo makes sense, because when the market breaks this low, it just signals that a potential shift in market structure has happened. So we should be rooted towards the sell side of it. So whenever the Quasimodo, you always sell whenever the market tests this shoulder, the high. But selling alone whenever the market tests this high tends to be risk. At least there must be a footprint with the market makers or the big institutions left. So this particular level you check at a potential supply level, you know, at a potential supply level, and it can come in form of a drop, base drop, whereby the market gave us a drop, then the base is where we had our supply level, then it dropped, or rally, then base, then drop, whereby in this rally, base, drop, the base is where we had our supply level, or the MPL, the maximum pain level, whereby it is a zone of significance, where we have multiple tests in that zone in form of the support or the resistance becoming the support again. So that at least it should click before you want to sell for this particular example. So you always sell whenever the market taps to this shoulder. So it is different from head and shoulders, the typical one, because the typical one you only sell whenever the market breaks the neckline, then when it tests it, you know, and the risk to reward. So whenever you sell in this Quasimodo pattern, your stop loss should be placed above, either depending on the risk scenario, the highest swing point of the right this shoulder, or slightly above the supply level that was created at this particular level, you know. For the buy example, we had our low at this particular point, we had our low, we had our high, we had our lower low, then the structure was broken at this particular level, the high was broken at that particular level to confirm now a higher high, you see, higher high. So we wait for the market to retest this shoulder, but at least there must be a framework. So this is the list to help you check. So you enter whenever the market tests this shoulder, but at least there must be a footprint, you know. There must be a demand now for buys. Sells, it is supply. For buys, demand. So there must be a demand level at this particular point, you know, that can give you the necessary footprint, because at some point you might place your positions whenever the market taps into this zone and the market just violate it, you know. This is a pattern at least that can help you to gauge and to track the footprints, and it works. So whenever the market retests the shoulder but having a demand level, you enter your buys, you know, you enter your buys. Now Another thing that you have to put into consideration, the Quasimodo patterns, the QM. Whenever I say the QM level, I'm talking about the pattern that was created here at this particular level. It is just a level in which a potential buys can take place. So it's upon you to know, whenever you see such pattern, just gauge which demand level potentially could price reverse from. And whenever you see it on a sell scenario, just gauge which supply level price can reverse from. Now, at this particular level, you should see the rally, base rally. At this particular level, you should be able to see the rally, base rally, the rally, base rally, potentially. Also, you can see the drop, base rally, either drop, base rally, or also the MPL, for you at least to be confident enough. Now, consider this example. This was GBP AUD. This is the low. This is the high. This is the lower low. Then market broke this high, giving us a higher high. Now to confirm that the bulls are dominant. Now, this is for the buy. So this level, you can mark your Quasimodo level this way, the body, or alternatively this way, the wick. But I chose the body because I looked at the area in which you had multiple rejections. You can see this level, the body of the candlesticks respected the level. Then we had some sort of rejections. It was now resistance at this particular level. It was support, support, support. So it is a zone that I picked. So picking the level, you can either choose the whole level, but I always prefer using the line at least to get me the precise level. Now this is the Quasimodo now pattern, the low, the high, the lower low, then the market made the high high. So whenever the market tests this shoulder, you buy. But why buy at that particular level? I said there must be a footprint that the market makers left. So this is the potential buy. Now we had some sort of rally base. This is the base now at that particular level, and the base had our demand level. Now the base had our demand level. So whenever the market, at least these are the, because it makes no sense, you can't know if we didn't have this demand level. You can see in form of the spinning top, at least the demand in form of the spinning top. The good thing about supply and demand, it helps you to refine your entries to the snippest possible. That is what I like about the supply and demand strategy. So we had our demand level in form of this spinning top inside this Quasimodo level, and I picked this level because of the multiple rejections. The candlestick respected the body. The book of the orders always reside within the body. So we had also this level. It was resistance level. We had support. So whenever the market dived into this level, I said stop loss placement below the demand for this particular case. So you could have bought at this particular level whenever the market tapped into it. Stop loss below this level, and you take your buys. Maybe your first target can be this high now. At least to take your first target from this higher high. So the market indeed dived into it. So whenever the market taps into it, you'll be a buyer, but at least you must have a framework. So this was the QM for the buys, QM level for the buys. So just to check the difference between the other one, you can see. Let's check on the sell scenario. Now, this is the sell scenario. We had our high. Then low, higher high, then we had our lower low. So we're always told that whenever the market retests this high, this level, we talk about why did I pick this level as my QM level. It was simply because of this. We had initially it was a resistance level, then it was support, and this level support. Let me mark. So this level, it was support. Let me use red. Support. Then here it was resistance. So it was a good level, So we always say you buy, you sell whenever the market retests this shoulder, but at least there must be something that the market left for us. We had this supply level, this candle. So for supply we use pink, for demand we use blue. So we had that supply level, this big one, but at least there is also another one, but at least for the purpose of explanation, you use that one. At least there must be a framework. Now you enter your cells. Your first target at least should be this low. So the market gave you a sniper whenever it dived, so you could have been tagged shorts. Stop loss above the demand level, just a few pips to accommodate the volatility spikes, so it was a sniper. Then the first target objective should be the lower low. So this is your first target. So guys, this is all about the Quasimodo, at least backtest. Quasimodo works well whenever you're in flow with the structure and whenever you know whatever the market is trying to seek or reach for. So basically, this was it. And remember to subscribe, share the link, invite more members so that the community will grow.